Well, you just heard Secretary Lutnick talking about this. President Trump is now granting 1-month tariff exemptions for automakers, that is car in Mexico and Canada. Car makers, though, warning prices could still climb as much as 25%, ultimately, if tariffs do go into effect. Our next guest says enforcement of the tariffs would, quote, eradicate the profits of the big three. General Motors, Ford, and Stellantis are the names that he's talking about. Dan Levy is Barclays auto analyst. I don't know, Dan, if you had an opportunity to listen to Secretary Lutnick talking about these exemptions that will take place in terms of those that are MCA compliant. It would seem to include the companies we just talked about, or in some ways. But what's the long-term picture here look like? And how do you try to figure it out as an auto analyst?
It's a lot. Thank you, David, Sarah, Carl, for having me. Yeah, it's a lot of uncertainty, and I would say it really casts a large overhang over the sector. I think everyone is trying to figure out the trade situation because it can drastically change the profit set for the companies, and making changes to the policies. These are going to be long dated efforts, right? Moving capacity can take, up to 24 months. So any changes are going to take time. And I think just clarity on policy is what a lot of the companies are seeking.
Yeah, I'm sure. I'd love you to respond. I mean, long, interesting conversation with Secretary Lutnick in which he talked a lot about auto manufacturers bringing everything back, essentially, and I'm paraphrasing, here to the United States. What would that look like in terms of cost for these automakers? Were they actually to do that? Because the Secretary obviously has a very optimistic view. What do you think?
Yeah, well, there's a reason why there is a heavy reliance on Canada, and really more so Mexico, for the auto industry in the U.S. And just to provide some numbers, roughly a quarter of the vehicles sold in the U.S. are manufactured in Canada and Mexico, mostly Mexico. But the bigger piece of it is the parts, right? Roughly half of the parts, and most of that being Mexico, are from Canada and Mexico. The big thing is that there's a large labor benefit in Mexico. And so that's where the automakers are producing, especially some of the lower cost variants. And so I think a lot of those labor differences have to be taken into account.
What about Europe? I mean, what kind of trade barriers do they have with our automakers? And is it really tougher for U.S. automakers to sell over in Europe? And if we do see reciprocal tariffs go through, what does it mean?
Well, Europe has been de-emphasized for Ford and GM. GM doesn't operate really in Europe any longer. Ford has a smaller European business. Stellantis obviously has a large European business there. As far as reciprocal tariffs go, I think the point being that, there is a heavy amount of imports. Roughly a quarter of U.S. vehicles sold are imported either from Asia or Europe. And I think that the point is leveling some of the playing field there. That's where I think you would see some of the U.S. automakers advocate for a leveling of the playing field.
Yeah. All right. And real quickly, what's it mean for all the stocks? I mean, are they dead money here?
Well, I think we need to see some clarity on the policy. The irony here is, especially for the automakers, GM in particular, the U.S. sales industry has been going really well, right? Like, we're seeing good volumes. Pricing is generally holding in. Inventories are remaining in check. And so if we can get past some of this uncertainty on the policy side, it's a good opportunity for the U.S. automakers, GM in particular.
All right. Dan, appreciate it. Thank you for your time.